the Steadefi. The Steadefi leverages the Geo protocol, providing the ultimate risk manage and diversify the Geo's strategy for all the market conditions. They backed by the Business Fund, Kyber Ventures, MC Ventures, and the cross 1 million USD TVL organically after 2 months. They also leverage users with the data nurtured on GMX, Camelot, Pangolin, and more. Welcome to the stage, Mr. Jeff from Steadefi.
Hello, I'm Jeff from Steadefi. Can I ask who's interested in DeFi here? DeFi? Okay, I just love to talk to anyone that's interested in DeFi, okay? So we are a leverage yield strategy protocol, and what we do is we automate risk management for you. If you guys are familiar with yield farming, back in DeFi summer, a lot of projects do yield farming. There's very high APRs, but you put your money in there, you leave it there for 3 to 6 months, and you realize that despite the high APR, you still lose money in terms of USD. And that's honestly what we're trying to do to fix that issue. You could go to the next slide. Yeah. So these are the questions that we're really trying to solve for. Because if you're familiar with DeFi and you've done yield farming, it might seem like we are yet another yield farming protocol. But really, what we're trying to do here is to say, hey, I have my crypto assets, I want to earn yield. What's the most capital efficient way to do so, right? I put my dollar into the protocol. Is the dollar being used to the maximum to earn yield? Secondly, can I earn yield across any market conditions or only during the bull market? In the bull market, you do anything, you make money. But as we know, for the last 1.5 to 2 years, it's a very crabbish market, it's a bearish market. You put your money in there, you realize that even though there's a very high APR, when you withdraw, you're still losing a lot of money. So we basically did our research, we did a lot of backtesting, and we believe the strategies that we have, we can cater to making yield as well in the bear market, bull market, and the crabbish market. Third question, can I earn yield passively, right? So a lot of the original yield farming protocols, they tempt you to put your money in there, and you start thinking, at this number of APR, I leave it in there for a few weeks, a few months, I can make a lot of money. But the truth is, you really need to be monitoring your position and knowing the time to withdraw and to also put in, depending on the market volatility. But can we do something to just automate all these things away, right? And the last one is there's a lot of different yield sources, and you can go to the next slide now. So just to kind of summarize what we do to do different from the current yield farming protocols. So our protocol, we provide under-collateralized lending, which is the most capital efficient way to earn yield on your money. To solve the problem of how to make yield in both the bull market and the bear market, we have strategies that are delta neutral as well as delta long. And I'll show you some charts to try to explain what those are. We, of course, want to make it as automated as possible. So we have a lot of bots and keepers that basically rebalance, monitor the health status of your vault, so you never have to go and monitor your own position over time. And then we have strategy vaults that just tap into all the different yield sources. So a lot of the yield sources in the original yield farming protocols are your DEX liquidity. But in the last 1.5 years, perpetual exchange are very big right now. A lot of real yield is on GMX, is on Level Finance. So we have strategy vaults that cater to these yield sources as well. Okay, next slide. Yeah. So generally, what are the type of yield sources that we want to create vaults into? I break it down into 4. So you have AMM DEX swap liquidity, perpetual DEX liquidity, of course. Liquid staking is huge right now, so we'll have strategy vaults into those as well. And then last, it's a little bit of a smaller one, but volatility yield is also another avenue source that we're looking into. Next slide. High level, this is kind of how we work. So we have the strategy vaults in the middle that has delta long and delta neutral strategies. And we also have our own lending vaults, which are single asset. And the strategy vaults basically borrow from the lending vault, and it's all within our own protocol, so we don't actually take liquidity from an external protocol. And at the end of the day, our strategy vaults just tap into the different yield sources. So, we have GLP strategies, Trader Joe, Pangolin, we'll have Curve coming up next, and we have a lot more basically. Next slide. This is a simple UI of how our product looks. You can just go over there on the URL and check it out as well. So on the right side is the leverage yield strategy vaults. You can see the APRs are a little bit higher. And so, In a bull market, if you want to earn yield, just put it into the long strategy. In the bear or sideways market, you can just put it into the neutral strategy. And then on the left, if you don't want to take any risk at all, you just want to borrow a single asset, let's say a USDC, or you have Bitcoin or ETH, you can just borrow, or you can just deposit into the lending asset instead of taking on the higher risk strategy vaults. Okay, next slide. So for anyone that's not familiar with what delta long or delta neutral means, it's basically correlation, right? So if you see the green line here, this is the value of the vault token. You know, when you put your money into a vault, the vault token has a value. And you can see that the green line correlates very closely with how the market prices of the assets are going, right? So these are actually different, these colored lines are different prices of the assets, Bitcoin, Ethereum, so on and so forth. So a long strategy correlates very closely with the asset prices. Next slide. And this is here a neutral strategy, and you can see that for a neutral strategy, despite the volatility of the assets, pretty much it doesn't correlate with the line. It's just more sideways, and the idea is that it's delta neutral. We basically do a lot of hedging for you. You're not going to earn as much yield and make so much more money when the market is bullish. But the good thing is that despite the volatility, whether it's a bull market or a bear market, you will still be slowly earning some good yield over time. Okay, next. So this is our progress so far. We started in September last year. We closed our seed round. We raised 750K at a 10 million fully diluted valuation. So Blizzard Fund, which is Ava Labs, Kyber Ventures, they invested in us. Long story short, we launched on mainnet in April. We just crossed 1 million TVL last weekend. And we have a lot of things coming up, a lot more vaults. So if any of you guys are working in DeFi, you have some real you and you want us to build vaults into you guys as well, hit me up. Okay, next slide. Am I out of time? Okay, if you're interested, talk to me. Thank you.
Thank you, Mr. Jeff. And thank you, Steadefi, for the great pitching.